If you are drowning in IRS debt, don't panic. There are ways to reduce or even eliminate what you owe, and today I'm going to break them down for you. By the end of this video, you'll learn the 7 proven methods to tackle IRS debt so you can take back control of your finances. As a tax attorney with 12 years of experience, I've helped clients reduce massive IRS debts using these exact methods, and we'll walk you through each one. There's one particular method that you can use to actually settle your debt for less than what you owe. It's not for everyone. Stick around and I'll explain how it works. The first option to reduce or eliminate your tax debt is filing an amended return. People are often surprised that you can change what was on your initial tax return by filing an amendment. Typically what happens is a client comes to us and they are unhappy with the work that their accountant had done. Maybe the accountant missed many tax deductions, and so the IRS is saying they owe more than they actually do. It's a fairly straightforward fix. You can file a Form 1040X for a personal tax return, and there are similar returns for business tax returns as well. But that is your opportunity to amend the tax return and increase the deductions or make any other changes you wish. People often ask, hey, am I going to be audited if I file an amended return? And the answer is, it depends. If you are filing an amended return to substantially reduce the tax that you owe, you are at an increased likelihood of being audited. So our recommendation is to make sure you are well prepared ahead of time, meaning that you have all of the deductions, all of the receipts, all of the bank and credit card statements to prove and substantiate the deduction if by chance the IRS were to audit you. If you have all of that information, you really shouldn't be afraid to file an amended return. You just don't want to file an amended return to substantially reduce the tax bill if you have no proof that you actually incurred those deductions. That would be a great idea. It's not something that we would recommend. Option 2, if you owe a lot of tax debt, you could enter into what's called currently non-collectible status. Currently non-collectible status, or CNC status, allows you to pause IRS collection efforts if you can prove a financial hardship. What this basically means is that your income barely covers your ordinary and necessary living expenses. So if you are making $8,000 a month in between your rent and your food and your car payments, you are spending $8,000 a month and you have no other way to pay the IRS, they're likely to put you on currently non-collectible status. So this would prevent wage garnishments. It would prevent levies. It would prevent other involuntary collection action. Now, while you're on currently non-collectible status, interest and penalties do continue to accrue. So whatever you owe is going to get higher, but the statute of limitations on collections also continues to run. So in theory, you could be on currently non-collectible status for the entire 10 years the IRS has to collect, at the end of which the IRS would wipe out your debt. If paying in full isn't possible, the IRS also offers flexible payment options. An installment agreement lets you pay off your tax debt over time in manageable monthly payments. And there are many different types of installment agreements, but essentially the IRS will allow you to pay what you owe over time rather than all at once. Again, like with currently non-collectible status, interest and penalties do continue to accrue, although the penalties are reduced a little bit while you're on the payment plan. If you are stuck with your spouse's tax debt, you may qualify for innocent spouse relief. Innocent spouse relief can eliminate your responsibility for tax debt caused by a spouse's incorrect filing. There are a few conditions that need to be met. You have to be unaware of the error, and you can't have benefited from the underreported income or the overreported expenses. Innocent spouse relief can be tough to qualify, but we've used it successfully in cases in the past, and that relieves one spouse of the joint liability for the taxes. So it can be a great option. You've probably seen commercials or heard radio ads to settle for less than what you owe, settle for pennies on the dollar. Those are a bit exaggerated, but it is possible to settle your tax debt through the offer in compromise process. An offer in compromise, or an OIC, allows you to settle your debt for less if you qualify. There are 3 different types of offers in compromise, but the most common is an offer in compromise doubt as to collectability. Essentially, the IRS will consider your income, your expenses, and any equity asset that you have. If you can prove to the IRS that you don't have sufficient assets to cover the liability and you don't make sufficient money to pay all your ordinary and necessary living expenses and pay the IRS, they will likely settle the debt for less. Approval is by no means guaranteed, but we use this option very often to reduce some pretty big tax bills. Next, we have bankruptcy. Bankruptcy can eliminate most but not all types of tax debt. So if you have income tax debt, bankruptcy can be a great option. If you owe payroll taxes or sales tax, bankruptcy isn't going to be that helpful. Those are non-dischargeable debts in bankruptcy. But if you just owe ordinary income tax debt, it is possible to wipe it out via a Chapter 7 bankruptcy, or at least restructure the debt in a Chapter 13. There are certain conditions in order to qualify for a bankruptcy. The debt has to be a certain age and the returns have to have been filed a certain number of years ago. But if no other options apply, or if you have substantial other debt, bankruptcy is a great option. So sometimes clients will come to us and maybe we could do an offer in compromise for them, but they also owe $200,000-$300,000 in credit card debt. And settling their IRS debt, yes, it is helpful, but really they need the whole package. They need their tax debt to go away as well as their personal consumer debt. In that case, if they qualify, a bankruptcy really is the best option for them. The next way to potentially reduce your tax debt is through an audit reconsideration. If the IRS made a mistake during an audit, you can fight back even if the audit is over. An audit reconsideration allows you to challenge the outcome of an audit if you have new evidence or documentation, or the IRS made some sort of calculation error during the audit. So what sometimes happens is people are completely unaware that they were even audited. Maybe they moved or changed locations. They did not respond to the audit notice, and they didn't really have an opportunity to provide any evidence or documentation. If that's the case, you could request an audit reconsideration and ask the IRS to reevaluate their position on how much you should owe. Again, we use this option occasionally when clients have maybe tried to handle an audit themselves, but didn't handle it as best as it could have been handled, or they didn't even realize that they were under audit and all of a sudden have a big tax bill that they're dealing with. That's it. Those are the 7 ways to reduce or eliminate your tax debt. If this video helped you understand how to tackle IRS debt, please hit that like button and subscribe for more tax saving strategies. And if you're dealing with tax debt and want professional help choosing the right solution, click the link below for a consultation. My team and I help people and businesses resolve complex IRS issues. In my next video, I'm going to talk about 3 things never to say to the IRS. It's really important, and if you say one of those 3 things, you could really mess up your case badly. So stick around and subscribe so you don't miss that video.